Good morning, everyone, and welcome to today's webinar on the Illinois Community Reinvestment Act. The department is pleased to have this presentation by the Illinois CRA Coalition, co-led by Housing Action Illinois and Woodstock Institute. For those of you I may have not met already, my name is Francisco Menchaca. I am the Director for the Division of Financial Institutions. Welcome. It was very nice to see so many familiar names on the registration list, as well as so many new ones. Thank you all for joining us in what I believe will be a real opportunity, not just to learn, but to inspire us all to look ahead at the exciting possibilities that the Illinois CRA represents. To begin, I'd like to share just a very brief history about the Illinois Community Reinvestment Act. It was signed into law in March of 2021. The Illinois Department of Financial and Professional Regulation worked diligently on the development of the CRA rules that would provide for the effective implementation of the Illinois CRA for credit unions in particular. To add a little bit more context, Illinois became the third state in the country to implement a state CRA that includes credit unions. The Illinois CRA applies to all state chartered credit unions regardless of size or lending activity. The CRA framework represents one of the most comprehensive state-level CRA programs in the nation. The Illinois CRA rules were adopted in May of 2024. One of the distinct features of the Illinois CRA for credit unions is the determination of the assessment field delineation. Another important feature that the department took into consideration is a distinction between all of the various Illinois state-chartered credit unions with SEG, associational, and community charters. The department thoughtfully considered size, community, common bond, and field of membership designations as the rules were developed and the assessment field delineations were submitted for review. And I want to thank all of you for submitting your request for an AFD review. Thank you very much for that. Now, I'd like to take a moment to thank our Illinois CRA team here at IDFPR. Many of you have met and interacted with this team over the last couple of years. Our legal team, Deputy General Counsel David Berland, Helen Kim, and Patrick Bernard. Their guidance has been invaluable. Gonzalo Gradilla, our credit union supervisor, has been key in the CRA implementation. Mr. Gradilla has 30 years of experience in administration and operations, which included experience as a thrift institution's CRA officer in the Chicagoland area. This experience is partially the driver that secured what I believe is a tremendous addition to our CRA team, that is Tram Vo as Credit Union CRA Supervisor. You should have received a special announcement that was sent out about a month ago upon her arrival. Tram has extensive experience from the financial institution's perspective on how to create and implement an effective CRA program. She'll be a great partner for us all. There's a lot of material that we're going to go through today. During the presentation, polls will pop up through a neat tool called Slido. Your responses will make the session more interactive and insightful. A link to participate will be in the chat. Please take a look at your chat now. After you click on that link, a new window will open, displaying the questions that will be asked. Your answers will be shared with the group and will guide the presenters on how best to direct the presentation in real time. If you have questions you'd like to be addressed in the Q&A later, please enter those into the chat. Presenters will answer questions that are related to the presentation shared. General questions related to the department may be addressed at a later time. I now want to thank our presenters for their willingness to join us here today. We have the honor of having Housing Action Illinois and Woodstock Institute here today to share their experience and expertise. These are just two of the organizations throughout Illinois that have a very sincere and dedicated passion for each and every credit union to succeed as the Illinois CRA is implemented. I would like to thank Sharon Legesna from Housing Action Illinois and Horacio Mendez from the Woodstock Institute for sharing our presenters with us today. Before we start, I want to share the following disclaimers. Number one, the views and opinions expressed during the presentation are those of the speakers and do not necessarily reflect the views or the positions of the department. Number two, please note that this presentation is being audio and visually recorded. Number 3, this presentation is for informational purposes only and should not be construed as legal advice. And 4, additional information relating to the Illinois Community Reinvestment Act and its implementing rules may be found on the department's website at IDFPR. Now let's take a quick check to see if everyone's Slido is working properly. We'll be starting off with a quick poll. Very good. So we've got about 75 respondents right now, and most are somewhat familiar, and some are just learning, and some are very familiar. So that's good to know. Excellent. Okay, there's a couple more submitting information. Good. A little over 80 responses. That's great. Thank you all. Excellent. Let's take another quick poll. We'll go to the second question right now. Now, we identified these different designations because of our consideration for what is considered a smaller credit union versus intermediate and what is a large institution. So as we can see, we've got a number, most, as a matter of fact, about 50% of our institutions that are responding here that are, smaller institutions. Fantastic. And that's representative of, I think, our credit unions across the state as well. Now I want to introduce Sharon Legesna, who will introduce the speakers and guide us through the remainder of the seminar. Sharon is the Executive Director of Housing Action Illinois, a statewide coalition formed to protect and expand the availability of quality, affordable, accessible housing throughout Illinois. While at Housing Action, Sharon has built partnerships and fostered connections among numerous stakeholders in the affordable housing and homelessness sectors. She routinely presents on these topics and engages with elected officials, regulators, and financial institutions to promote equitable housing policies and initiatives. Sharon, please take it away.
Great, thank you, and good morning, everyone. We really appreciate this opportunity to work with IDFPR to present this educational webinar. As the director stated, my name is Sharon Legenza, and I'm the Executive Director of Housing Action Illinois. One thing I want to note is that Housing Action, we're a membership-based organization, which means that we work with a wide variety of organizations throughout the state of Illinois. So we generally know what's happening in the affordable housing and community development field. And I wanted to make that point because if anyone would like to reach out to make new connections in your community, please contact us because we may know of some not-for-profit organizations working in your backyard. One of our key partners, especially on the Illinois CRA, is the Woodstock Institute. Woodstock's mission is to advance economic justice and racial equity within financial systems through research and advocacy at the local, state, and national levels. They co-lead the Illinois CRA Coalition with Housing Action, as well as engage in a number of other policy campaigns and research initiatives. As you see, we're here as part of the Illinois CRA Coalition, which is a group of over 50 organizations dedicated to protecting and strengthening the federal and Illinois Community Reinvestment Acts. We believe that these are tools for building more equitable communities and addressing the racial wealth gap. The Illinois CRA Coalition over the past few years have engaged in a wide variety of activities, including educational webinars like this, and are committed to working collectively to ensure that the Illinois CRA is well implemented. We're happy to discuss additional ways in which we can assist credit unions as we go forward in implementing this relatively new law. So if I could go to slide 3, please, or the next slide. I'd like to introduce our two main presenters today, James Miller and Jane Doyle. Jane is the Senior Regulatory Policy Associate at Woodstock Institute, where she works on Woodstock's regulatory policy agenda to protect consumers, expand access to safe and affordable financial services, and spur reinvestment in the communities that need it most. And then the next speaker is James Miller, who's a capacity building associate with Housing Action Illinois. He assists members with resource development and programmatic improvement, and supports our advocacy and regulatory work through the Illinois CRA Coalition. One thing I want to note before we get into the body of the presentation is if you have questions, please put them in the chat and we'll try to address them at the end of the presentation. There may be some opportunities throughout, but we're not sure. So please go ahead and put questions in the chat and we'll do our best to address them at some point during the presentation. So now I'm going to hand it over to James.
Thanks, Sharon. Thank you everyone for joining us today. Giving us an idea of kind of your background knowledge on the CRA. It seems like we have a bit of a range here. People who are very familiar, and I'm sure worked on it in a similar way that we have over at the Illinois CRA Coalition, and those who are still just getting their introduction. So I'm going to start with a background on the Illinois CRA itself. This will be retreading some ground for those of you who are most familiar, but we want to make sure everybody's kind of on the same page for our discussion today. As Director Menchaca mentioned, the Illinois CRA was signed into law by Governor Pritzker in 2021, and the final rules were adopted in May last year, 2024. The law was passed as part of the Illinois Legislative Black Caucus's policy agenda, falling under their economic access, equity, and opportunity pillar. It was largely driven and passed in response to a WBEZ story highlighting mortgage lending disparity in Chicago. The law was intended to supplement the federal CRA by building out a state regulatory framework aimed at reversing the consequences of redlining. The law made Illinois the second state with an oversight system covering all three major segments of the mortgage lending market. That's the state chartered banks, state chartered credit unions, and state licensed mortgage companies. Introducing a new CRA obligation for credit unions and for the mortgage companies as well. To that effect, the Illinois CRA acts as a tool to examine how covered entities invest and conduct businesses in Illinois communities. The law requires covered entities to meet the financial service needs of the communities they serve with a focus on providing access to credit for low to moderate income neighborhoods and households. Under the law, the Illinois Department of Financial and Professional Regulation will assess how well each covered entity fulfills its obligation to provide accessible and responsible financial products and services to the communities that they're chartered to serve. Based on those assessments, IDFPR will assign each entity a rating that is used to evaluate applications for activities like relocations, mergers, consolidations, acquisitions, or assumptions of liability. Next slide, please. So this conversation today and any discussion around the CRA, both the federal and the state, comes with a lot of terms of art in the industry and a lot of acronyms. I'm sure a lot of you are very familiar with these, but again, just to make sure everyone's on the same page, we wanted to cover some of the most common ones that we're going to use today and that you will see in these ongoing conversations. And some of which I think I myself have already even used today, the low and moderate income. So I'm going to focus in on kind of that AMI and the LMI right at the top. So area median income is used to determine the LMI status, and that LMI, the low and moderate income status of households and neighborhoods, is used to determine eligibility for government programs and funding opportunities. To break down kind of what AMI, the area median income, is, it varies by location, but is a set number based on a family of 4 for the median income for that area. When it comes to the individual status of a household or an individual, their LMI, excuse me, their LMI status varies based on the size of their household, as well as the income for their area. So to give you a kind of a baseline idea, there's a statewide number for Illinois. The Illinois AMI is $110,000 and $100, excuse me. Whereas if you're looking at the Chicago metro area, the AMI there is just short of $120,000 a year, and then annual income. The last two acronyms that we will be using today and kind of you see very often are CDFI and MDI, the Minority Deposit Institution, and CDFI, as I said, the Community Development Financial Institution. Both of these are certifications given out by federal regulators. Many of you, again, are familiar with these. Some of you probably are CDFIs because they are institutions focused on serving communities that are underserved by mainstream banking. But again, just wanted to kind of lead with, sorry, I'll answer. I see a question really fast. I'll answer that right now. So AMI, as it says here, is a number published by the Department of Housing and Urban Development every year. And really the easiest way to find it is to Google HUD AMI. And that will take you to a webpage where you can search based on the county you're located in, and it will give you the AMI for that area. There are, as I said before, there are statewide numbers that apply to areas that are less densely populated, whereas HUD then sets numbers as well for metropolitan areas individually too. All right, next slide, please. So, an important aspect of our work going forward with the Illinois CRA Coalition, and where we are trying to come from today and all of our activity right now, is we want the Illinois CRA to work. And what we mean by that for ourselves and for everyone involved, and we can actually jump to the next slide, please, is we know the rulemaking process was difficult and at times contentious. But we want to acknowledge here that everyone involved with the Illinois CRA Coalition and guiding all the work we do, is we know that covered entities, credit unions very much included and maybe centered in that, are part of the communities where they're based. The people who work at those credit unions are members of those communities. And we know that your goal is to provide what is best for your communities. We do not see this as two sides of a table anymore, where we have those covered and those who will benefit. This is about coming together to make sure the rules work for the benefit of everyone. Our focus at the Illinois CRA Coalition has shifted now that the rules are in place to making sure, as I said, that the rules work for everyone, whether they are the covered entity or community-based organization or individual members of the community. We've redirected our efforts since the rulemaking to education and outreach around the Illinois CRA. Over the past 8 months, 9 months, we've hosted three in-person meetings, roundtables across the state, bringing together all interested parties to try to help form some of those relationships that are going to be very important for implementation of the CRA, and have started developing materials as well to help with that implementation and to guide people and groups to better understand what the Illinois CRA does and what its requirements are for everyone. We are working to act as a resource, not just for the community-based organizations that are members of groups like Housing Action Illinois, but also for covered entities. If you're interested in assistance with outreach or identifying potential CRA partners in your area, we would like to be involved in those conversations and to help kind of start to form those bonds. We are also going to be developing toolkits to help community-based organizations identify potential CRA eligible activities so they can come to covered entities prepared and provide the information that you need on your end. If there are other discussions you're interested in around the Illinois CRA, please feel free to reach out to Jane or me after this webinar. We are always happy to have one-on-ones and get a little more in depth on what the Illinois CRA means for you. And I think kind of in that frame, I'd like if we could toss up Slido question number 3 to get an idea of what everyone on the calls, I believe. I'll let the question speak for itself before we jump into the next part of our presentation. Okay, great. Yeah, thank you very much, everyone. This gives us a little bit of an idea of who we're speaking to and kind of what role you'll be taking within your institution towards the CRA. Now we've covered a little bit of background, both the CRA itself, and some of the terms of art we'll be using, and where we're trying to come from to you as an audience. I'm going to pass things over to Jane, who's going to discuss what it is IDFPR will be assessing as part of the examination process for the Illinois CRA.
Thank you very much, James. So good morning, everybody. First, I'm going to talk through a little bit more about community development and what that means in the context of the CRA. Then we're going to talk a little bit about the exam process and the tests. And I also am going to touch on the special, more tailored exam process for very small, and intermediate small credit unions, which based on that poll, is about 80% of the audience today. So I definitely want to make sure to get you information on that. And then last, I'll toss it back to James to talk about assessment fields. Next slide, please. There we go. So, as James mentioned, we've been doing a version of this presentation for a few months now. And one question we started getting early on was, what exactly does community development mean? One definition is community development is activities that serve LMI communities and their needs, especially related to banking, credit, housing, and financial education. That's still not terribly specific, so I also find it helpful to think about community development in kind of 4 buckets. These aren't necessarily official designations, but I think they're a helpful way to kind of wrap your brain around what it is that we're talking about. So the first bucket is affordable housing. This could be everything from the very large end, like financing affordable housing projects, but it could also be on the more one-on-one end, like housing counseling activities, down payment assistance, offering an affordable mortgage product, those sorts of things. The second bucket is economic development and small business. This is, of course, where small business lending falls, but this is also where activities to support organizations that support small businesses would fall. Think organizations that provide technical assistance or help small businesses navigate the complicated financing network for small business loans, that sort of thing. Because we know that local economies, a strong local economy can help support strong communities as well. The third bucket is stabilizing and revitalizing LMI communities. A few things I think of under this bucket are activities like foreclosure prevention, and also we know that there are essential service deserts in various places across the state. Grocery store deserts, banking deserts, healthcare deserts, all of these sorts of things. So another kind of activity that can fall under this bucket is activities to help bring those kinds of essential services to communities that need them, like grocery stores, childcare centers, healthcare facilities, that sort of thing. And then the fourth bucket is social services for LMI individuals and communities. For CRA covered entities, this is where things like volunteer hours might fall, but it's also just kind of a broad bucket for supporting organizations that provide services to LMI communities. And then another piece that's worth mentioning, but is really only a sometimes thing, in the event of a natural disaster, disaster recovery and remediation efforts are also a great example of community development activity. Next slide, please. So now to get into a few more specific things, either that are called out in the Illinois CRA rules as potentially eligible activities, or that we have seen banks engage in and the federal CRA. First, I bolded it. I really wanted to highlight this, and especially for this audience. Having larger institutions provide material support for small credit unions and minority depository institutions may be a CRA eligible activity. So for lots of the small credit unions in the audience, you could also be a beneficiary of CRA investments from larger institutions. As James mentioned, if you are a small credit union wanting to connect with larger institutions that may be interested in that, feel free to reach out to us. We would love to be the connector there. And same for large institutions that want to connect with smaller credit unions for Illinois CRA activity. A few other examples: making a grant to investment in or forming a partnership with a nonprofit or community-based organization that serves LMI communities. That might be something like providing support for supporting housing developments or organizations, including activities like funding or sponsoring a financial education event or webinar, workshop, or providing technical support directly to those organizations, kind of on the back office end of things. The rule also calls out offering a bank-on account or the equivalent as a potentially CRA eligible activity. Bank-on accounts are, of course, a state designation. I know there are lots of credit unions across the state of Illinois that offer bank-on certified accounts, but bank-on accounts, the goal is to bring unbanked or underbanked consumers into the financial mainstream to help get them access to more affordable and safe financial services rather than relying on the oftentimes more expensive alternative financial services. And then these last few are more relevant to the larger credit unions in the audience, but some other activities that we see with the federal CRA are investing in a CDFI's loan pool, financing a housing development using low-income housing tax credits or LIHTC, or offering a special purpose credit program either in the mortgage space or the small business space. Next slide, please. All right, so the exam process. You can think about the exam as an opportunity to tell the story of how your credit union engages in community development. Maybe the last couple of slides kind of got the wheels turning, and maybe something sounded like an activity that you already engage in, a long-running program that you have. Maybe that sounded like something that was a program that you used to have, and the Illinois CRA could be an opportunity to revive that kind of program or activity. Or maybe this is something entirely new that you want to jump into, a new CRA eligible activity. So this is the opportunity for you to tell that story of how your credit union engages in that in the communities that you serve. As Director Menchaca mentioned, IDFPR started exams earlier this year, and the exam schedules are posted quarterly on their website. The core of the test consists of, or the core of the exam consists of 3 tests: the lending test, service test, and investment test, which is optional for credit unions. But as I mentioned, there are special exam procedures for intermediate small credit unions, and very small credit unions. So if looking at those asset thresholds and based on the poll questions, if you think your credit union falls into one of those categories, sit tight, don't get overwhelmed by the next couple of slides. I have a slide dedicated to you all. Next, the exam results, like the federal CRA, there will be a public portion of the CRA exam that is posted publicly online, and that also includes the CRA rating that an entity achieved. Like the federal CRA, this uses the same 4 ratings: outstanding and satisfactory are passing ratings, and needs to improve and substantial non-compliance are not passing ratings. Getting a not passing rating will lead to a shorter timeline for the next exam to occur. The idea being, want to get in there, make sure that any issue that came up that led to that not passing rating, that's being addressed and things are moving in the right direction. All right, so this is, of course, for the largest credit unions. I know that was only about 20% of our audience today, so I won't spend a ton of time on these slides. I'll spend more time on the small credit union slide. But the lending test evaluates mortgage lending, small business lending, and community development lending, and sometimes consumer lending, if that's a substantial portion of, or a substantial majority of the business that your entity conducts. And here I really want to highlight that the Illinois CRA is just focused on your current product offerings. It's not requiring an entity to start offering a new product line or a new business line. So if your credit union does not do any kind of business lending, that's not part of your regular services, that's just not something that you'll be evaluated on this exam. You'll be evaluated on the product lines that you do offer. I really wanted to highlight that here. The lending test will look at the geographic distribution for mortgage and small business lending, and it'll look at the borrower characteristics. For mortgage and consumer loans, that will be the income level of the individual borrower. And for small business loans, that will look at the number of loans to businesses with less than $1 million in gross annual revenue, and the dollar amount of those small business loans. And then I also wanted to mention that if your credit union has initiated some kind of innovative or flexible lending practices, of course, still within the bounds of safe and sound operations, but if you've initiated some sort of flexible lending practice to respond to a need that you saw in the community, that's something that you might receive consideration for on your CRA exam. Next slide. So the service test looks at the responsiveness and effectiveness of service delivery channels. Essentially, how are you reaching your members? How are you providing your credit union services to them? Most obvious example of this is, of course, a branch network and how that's distributed across your assessment field or any record of opening or closing branches. But this test will also look at the availability and effectiveness of alternative systems, things like fee-free ATM networks, phone or online banking, or bank at work programs, to name a few. And this test will also look at how an entity is marketing any products that they have that are tailored to the needs of unbanked and underbanked consumers. Want to make sure that if there's a product like that an entity has developed, it's not just sitting on the shelf, it's actually creating the benefit in community that it should. Next slide. So the investment test I mentioned is optional. Credit unions may elect to be evaluated under this test. And it's also important to note here that there can't be any overlap with the other two tests. So if something appeared on the lending test or the service test, it can't then also appear on the investment test. So just my personal conjecture, I would guess that a credit union would elect to be evaluated under this if they have some activity that they've engaged in that they really want to highlight, but that doesn't fit under those other two tests. That's just my own conjecture. All right, next slide. Small credit unions, I promise to come back to you. So, very small credit unions are those, all credit unions that have less than $25 million in assets are eligible for the very small credit union exam. And for credit unions between 25 million and 100 million, if you made less than 50 mortgage loans the prior year, you may be eligible for the very small credit union exam. And that very small credit union exam consists primarily of written responses. Things like describe your marketing efforts to underbanked consumers, or describe how you market your products to your members. There's a few questions like that, but it's primarily written responses. It's not that same level of quantitative detail that we saw under the larger credit union tests. And I also wanted to highlight here that credit unions will have the opportunity to review their proposed responses with an IDFPR Illinois CRA examiner before they submit it. So that's a really great feature that I hope folks are able to take advantage of. Small credit unions are those with less than $402 million in assets. And the small credit union exam consists of a lending test that's more tailored. This one focuses more on the geographic distribution of loans across your assessment field. And for small credit unions that do business loans, this will also look at similar metrics on small business loans, like it will also look at how many loans you've done to small businesses, especially in low and moderate income communities. Intermediate small credit unions are those between $402 million in assets and $1.6-ish billion in assets. The intermediate small credit unions get that same lending test, plus they also get a community development test, which will look at the number and dollar volume of community development loans. It'll look at the extent to which the credit union provides community development services and how they've been responsive to community development needs that they've seen in their area. I also wanted to highlight that the 402 million and the 1.6 billion threshold numbers, those are adjusted annually for inflation, and they're the same as the bank thresholds for the Illinois CRA, so they they kind of come through that. IDFPR publishes those updates on their website every year. And the 100 million number, that's based on the National Credit Union Administration's definition of small entity. So that may change if the NCUA were to change that definition. But just so you know, that's where those numbers come from. And I believe that is it from me. Now you know kind of what the tests look like and what entities are evaluated on. James is going to talk about where they're evaluated on it.
Thanks, Jane. So, where will your activities be evaluated? And that is, for credit unions, your assessment fields. And assessment fields are the defined areas or populations for which each credit union's activities will be evaluated by IDFPR. Now, assessment fields for credit unions, unlike the assessment areas for other entities, are not necessarily geographically based, because we know your activities are not necessarily located specifically by geography. Credit unions must delineate their own assessment fields. While you will not be evaluated based on those selections, the delineation of the assessment field is subject to review by IDFPR to ensure that it meets the requirements within the final rules, which I'm going to go over kind of what those requirements are. So credit unions' assessment fields are selected based on that institution's field of membership and must consist of members of their occupational and associational common bonds, members other than community common bond members, and the geographies containing members and eligible members based on their community common bonds. Now, I believe all of you have spent more time with that kind of language than I have, but to summarize that, it's really just to say that your assessment field must be made up of the individuals or geographic areas that make up your current and eligible members. There are some exemptions and additional considerations to that baseline requirement that will impact your assessment field selection. Credit unions can limit the size or scope of their assessment field to what they can reasonably serve. And that's going to be based on factors including the size of the entity, financial health, the ability to conduct marketing outreach, and the locations of offices and branches. Credit unions can choose to include or exclude community common bond members that are located outside of the state of Illinois. That is a selection that you can make when delineating your assessment field. When making the selection, the most limited selection that can be made by a credit union with the approval of IDFPR is to select only those individuals who are already members. So that would exclude eligible members for the credit union. Now, there are two primary restrictions, and I believe I have them both listed here, in the selection of an assessment field, and that is they must not reflect illegal discrimination, and second, arbitrarily exclude low and moderate income geographies or households. Now, selections need to be communicated to, selections of your assessment fields need to be communicated to IDFPR in writing. Credit unions can change their delineation at any time except after your exam has been scheduled. The assessment fields do need to be updated if there are any modifications to your field of membership. So now that we've discussed kind of what's in these exams, where you're going to be looked at, we're going to get into some specific examples of CRA partnerships that community-based organizations have had with banks, because they are the only ones who in the past have had this CRA obligation. But first, I want to direct you and point you to a couple of places. The first is the Illinois CRA Coalition webpage. This is where we post updates about the state and federal CRAs. We post educational information. It's where we're going to be continuing to post our toolkits and additional material as we create it. This is also where we post any information about events that we are hosting to discuss in the CRA itself or to bring organizations together. I will also point you to Woodstock Institute's data portal. And this is where you can jump on to review HMDA data from across the state and narrow it down, filter it, analyze it, and take a good look to get an idea of what's going on in your community and maybe nearby communities. So please, after today, feel free, we've said it before, but to reach out to Jane or me with any questions you have, or to provide any feedback on what you're seeing from the Illinois CRA and kind of what would help make it work better for your organization.
James, can I, before we move on to the specific examples, we had a question that I interpreted to be about how may the credit unions maybe map where some of their loans or lending is going? And I thought it might be helpful. Someone responded around opportunityzones.com as one way to see where low-income communities are. But Jane, perhaps you could maybe give a little bit more detail about Woodstock's lending data portal. This might be a good time to try to address that question as well as give more detail about the lending portal.
Yeah, sure thing. So our data portal includes Home Mortgage Disclosure Act data. So that's the loan level, all the mortgages that that lenders made in Illinois and had to report to the federal government. It's all anonymized, but it does get down to the census tract level. So we've got all of that data. The numbers for 2024 are out now, and they're in our data portal, so you can see everything up through last year. And there's also a few other data sets that we layer over in our data portal, like American Community Survey data. So that's demographic information like income, racial demographics, makeup of households like owners or renters, what the housing stock looks like. There's tons of information in our data portal. It's very rich. But yeah, I encourage you to check that out. If you're interested in learning a little bit more about what lending looks like in the area that you serve and maybe what some of your peer institutions are doing. And now I think we'll toss it over to Sandy for our first case study.
Hello, my name is Sandy Daters. I'm the Housing Counselor Coordinator here at IRBA for the Amberall River Basin Agency. So a little bit more about who we are. The Amberall River Basin Agency, we're a community action agency in South Central Illinois, primarily in the 9 counties that are listed there, with the exception of our pre-purchase program, which we provide education and one-on-one sessions for down payment assistance across the state of Illinois. So last year we assisted bank and lending institutions with approximately 425 pre-purchase one-on-ones each year. So we're very proud of that. We are also a HUD certified housing counseling agency. So a little bit about, next slide, please. So a little bit about our partnerships with with lending institutions. So the Community Reinvestment Act is a powerful way to leverage our relationships with a HUD certified housing counseling agency. And we are serving rural and low to moderate income families. So when I approach a lending institution, I often ask, how can IRBA meet your CRA needs and assist your customers? And nearly 100% of our clients are low to moderate income, so it's a great fit for the CRA program. And partnerships with IRBA varies depending on what your CRA needs are and what your wishes are and what your client goals are in achieving those. Next slide, please. So here's a few examples of the partnerships that we have with different lending institutions, and we're very rural, so we're primarily working with very small to intermediate lending institutions, banks, credit unions, and one thing that I often get asked is, can I cover just a specific county? And the answer is yes. So I partnered with a bank and they wanted to cover Richland County and Douglas County in Illinois. Yes, I can help out with that. We also have a community needs assessment And that is often a good way to see maybe what some of your CRA goals need to be driven with. We have about 900 families that answer that survey. So IRBA does receive a grant, for instance, to do like 12 steps to purchase a home. It was a Zoom webinar. IRBA created that presentation, IRBA promoted it, and invited participants. So that was one way a bank was interested in helping us. Another way is that IRBA presented a budget and credit workshop at the bank facility. Again, IRBA, along with the bank, promoted that workshop, and we invited our clients as well as did some marketing for it. And another lending institution hosted budget and credit workshop series for our Head Start families. And then at the completion of that, they did a donation to the children's account when that was completed. They had a series of workshops that they had set up. Again, IRBA promoted that through our Head Start families and sent out invites to those families. And then lastly, lending institutions just choose to donate to IRBA for the work that we do for our low to moderate income families. And the donation amounts do vary. Some of the work that we use those funds for are budget and credit, one-on-one. We do financial literacy with those families. We do pre-purchase, post-purchase, foreclosure, and prevention one-on-ones with those clients. Every client that we see does go through budget and credit review. So lastly, on my last slide, what financial institutions gain from this collaboration? IRBA provides the demographic data from our client management system, which is called Impact Pro, to the lending institutions, and the impacts to the banks and the credit unions, can be reported to bank examiners. Examples, number of families served, income levels, improved credit, home purchases. Pre and post purchase surveys can be done to show a growth in the financial literacy that they've achieved over that period of time. And we also refer our clients to bank lending institutions, credit unions that have credit building products. They're looking for ways to improve their credit score. And just Jane mentioned earlier, the bank on accounts would be great. What kind of products do you have? What kind of loans do you offer? Those are very important things to share with a housing counseling institution agency, because we have clients that are looking to improve and looking to get loans at some point in time. And although we cannot, we give as a HUD certified housing counseling agency, we can refer them to 3 different institutions. But if we only have one institution's information on products, then that's what we share with them. Media exposure to newspapers, radios, and social media. So we can put those invites to that financial literacy, that workshop out there, and your name will be shared. And also, we share success stories and, let you know how those families have been positively affected by the partnerships that we create with the lending institutions. And I do get calls from examiners from time to time asking us, how have you worked with XYZ lending institution? They ask me if we've created any partnerships, if we know about your products, we know about your services. So that's one thing that I do on a regular basis. So my contact information was on the first slide. So if you're interested in partnering with with the HUD certified housing counseling agency, I'd love to talk to you. Or if you have any more in-depth questions about how I partner, just shoot me an email. Thank you so much.
The one question, or kind of a bundle of question really were around, I interpret it as being around unbanked or underbanked. Like, how do you identify such potential customers or consumers, and what are some specific examples of marketing? And before I open it up to Jane and James, I would just say that one thing in terms of identifying underbanked and unbanked is actually partnering with community-based organizations who may be serving those populations, groups like IRBA and Sandy's group, because they're community-based, they're working with low and moderate income populations and doing a lot of outreach and education. And they may already know in your community kind of where there may be groups of unbanked or underbanked. And then Jane and James. I took the easy part of the answer.
That's all right. Thank you, Sharon. I think the other aspect I wanted to touch on is ensuring part of that marketing is ensuring that you have products that are directed towards unbanked and underbanked individuals. So whether those are things like offering small dollar or microfinance loans, having credit building products and programs, things like that, and you market even under your normal way, that will hit a different market when they see that availability to them. And Jane, did you have anything you wanted to add there?
Yeah, I'm just dropping some links in the chat. Resources from the Bank On coalitions might also be helpful. There's the national initiative, which is the link that I just put in. This is the link to the Illinois Comptroller's page about Bank On Illinois for the statewide coalition. And then there is also a website specific to the Bank On Chicago coalition if you are in the Chicago metro area. But resources from those groups might be helpful in terms of informing how you market. Sharon, you're muted now.
Again, technology also always gets us, no matter how many years we've done this. Things. And then the other one had to do with kind of the mapping of lending activities. And I noted that someone said that they do primarily car loans. And I recognize that not all data sources cover everything. That is one of the challenges, that it's a little bit of searching to make sure that you're getting the data you need for your services. And I think Jane had put in maybe a link in addition a little bit further up.
Yeah, I was thinking that might be, if that's not something that your credit union has the ability to do in-house, that might be something that you explore working with a QSO on. Or that could, if you're a small credit union, that could be an opportunity to get support from a larger entity in terms of raising your tech capacity and capacity building kind of stuff.
My name is Rob Anthony. I'm the president at Community Partners for Affordable Housing. We're a very broad-based affordable housing organization. We provide HUD-certified housing counseling and education. We administer rental assistance programs, down payment assistance programs, home repair programs, accessibility programs, foreclosure prevention. We help administer inclusionary housing ordinances through a lot of different communities. We are the first community land trust program in Illinois. So a lot of different types of programs around renting, repairing, and saving homes from foreclosure. We are also a developer, so we develop new affordable housing. We've developed about 1,200 units since we got started. Our service area is essentially the northern suburbs of Chicago. We work from Evanston up to the Wisconsin border. So we were asked to talk a little bit about an example of one of our partnerships with a CRA, a lending institution. And the partnership that we really cherish is with Wintrust. They've done a just fantastic job partnering with us in a number of different ways. And so I can run through some of those. On a larger scale, Wintrust has participated in new construction developments through being the equity investor in low-income housing tax credit projects. So for example, we have a development right now, a 34-unit senior development, where they are the equity investor in that development. They also are providing the construction financing for the developments, and they are purchasing the Illinois affordable housing tax credits for that development as well. They've also made a grant to us to secure naming rights for the community room in that building. So they've participated a lot in that particular development that we're working on right now. But there are a lot of other ways that they've participated too that might be more applicable to some of the smaller credit unions. So they've served on our board, so they've had volunteer time through both our regular board and our advisory board. We have volunteer days where they will come in and they'll work on a home. So they'll take a half a day and have staff and sometimes their families come in, and they love to, gut kitchens and tear down cabinets and do things like that. So they get their hands dirty on some of our projects. With our community land trust program, if you're not familiar with that model, the way that that works in a nutshell is that we will either build new housing or we'll acquire and rehab housing. And then we retain ownership, the nonprofit entity retains ownership of the underlying land, but we sell the improvements or the home to a low to moderate income household. And so essentially you're taking the land value out of the equation so that the home stays affordable in perpetuity. And essentially a $400,000 house can become a $200,000 house or a $180,000 house if you're not calculating the land value. So Wintrust provides lines of credit for us when we acquire those properties, and then we repay those lines when we sell the home to the low-income household. They also provide financing, permanent mortgages for those home buyers. CLT properties are actually a really great loan. It's a very low loan to value ratio. It's a very low default rate, but a lot of times, particularly larger lenders, do not want to provide loans for CLT homes because it sort of messes up the assembly line of their mortgages. It's a little bit different the way that it works, and so they have to pull it out and treat it separately. And if they're processing a lot of loans and mortgages, they don't really want to take the time to pull this out and handle it a little bit differently. But Wintrust has done a great job with that. They also provide financing for our rental developments, both larger developments and single-family homes. We have community integrated living arrangements, which are essentially group homes for persons with developmental disabilities. They provide lending for some of those homes. They have participated in our down payment assistance program and have also invested in our down payment assistance pool. And they've participated through a match savings program as well. So we have a financial education curriculum for our CLT homeowners. And as part of getting people into the habit of savings, if people complete that class and they regularly contribute to a savings account every month for 12 months, the bank will triple the contributions that the homeowner is putting in as a way to match those. What am I leaving out? So occasionally Wintrust has had homes that they've sold to us for below market rates. So that's been fantastic. They've really just, we've developed this partnership with them where they sort of feel like family. If we need anything, we know that we can go to them and they'll do whatever they can do to try to support us. As another just sort of silly example, when we actually merged 3 nonprofit housing organizations back in 2019. When we merged, we moved into a new office, and so we needed additional furniture. And around that time, Wintrust provided a grant to help with the merger study and the merger cost. And then they said, well, what else do you need? And we're like, right now we really need furniture. And so they brought us down to this warehouse that they had that had a lot of excess furniture from their various branches. And, they just said, put a sticky note on whatever you need and come back and pick it up. And we furnished our office that way. And, they were able to get CRA credit for a lot of these different partnerships. And one of the things too that I think when you're looking at CRA partnerships, one of the things that we really love about Wintrust is that they're clearly not just doing it for CRA credit. I mean, they're getting that credit, but they're really interested in the community and contributing and trying to make better quality of life for our residents. And we work with a number of other institutions too. And when people are genuine about trying to make a difference, it really comes through. And I think those who are just trying to get CRA credit, that comes through too. So, my advice or my hope, if you're looking at creating new partnerships, is to really be fully committed to it and do it for not just the CRA credit purposes.
All right, thank you, Rob. We appreciate your time today, and I'm going to pass things briefly over to Sharon Lagenza one more time to talk a little bit more about housing action in Woodstock one last time before we jump into
I'm sorry, did we want to jump back to Jane around Great Lakes?
No, go ahead.
Oh, okay, I'm sorry. We got a little bit off track here with our schedule, but well, great. So these are some, we wanted to provide some concrete examples of how current not-for-profits are partnering with financial institutions. And we know that it's a new kind of landscape for credit unions, but these are, maybe not all of the ways in which Sandy and Rob talked about are applicable, but I think many of them, could be or can be. And one thing I know we talked about internally is that with credit unions and membership and your membership bases, that it seems to me that there might be ways to partner with housing counseling agencies, for example, around financial literacy, credit repair, pre-purchase, etc. So these are just some ways in which we would be happy to talk with you about partnership opportunities. I also wanted to mention that many of the activities at Housing Action Illinois and Woodstock Institute ourselves that we do have been found to be CRA eligible activities, at least under the federal CRA. For example, Housing Action, we do a lot of capacity building support and training for not-for-profit housing counseling agencies like Sandy's and actually Rob's organization to make sure that counselors have the knowledge and skills they need to best serve low and moderate income communities. And similarly, Woodstock Institute has received bank support for their community lending portal and certain research reports. So we just wanted to put that out there as potential partnership opportunities. But the bottom line, I think, for the case studies and what I'm saying now is that, we want this to work, and we want this to work for credit unions as well as for communities and community-based organizations. And so if there's ways in which we can connect you with not-for-profits serving your communities to get information, to understand community needs, to potentially engage in programs or other partnerships, we'd be happy to do that and to try to connect you.
Well, I hope that that the information that has been shared today has provided some folks a little bit more comfort, and maybe they're not quite experts, but they know a little bit more about CRAs. So that's great. Thank you all for participating in the poll. We hope it's the first time we've used it here, so it was interesting, and we really enjoyed it. And with that, I think we've gone through any potential questions out there. So, Sharon, James, Jane, Rob, Sandy, thank you for sharing your expertise. Really appreciate it. Thank you very much. And I want to thank all of you for just joining us here today and taking your time to be here. I hope that you have found this presentation of value. Once again, I want to take the opportunity to thank the ILCRA Coalition, the Illinois CRA Coalition, co-led by Housing Action Illinois, and the Woodstock Institute. We're going to put in our chat right now the link to IDFPR's video library. Once we have this presentation kind of finalized, we will have that available as well on our website, so you'll be able to take a look at it. So I hope you all agree that this information shared is just a glimpse of the potential opportunities ahead. And thank you all for taking time to be here with us today. We really hope that we're going to be able to continue this kind of mutually rewarding, ongoing conversation with you all. Anybody who has any particular questions, specific questions for the department, feel free to reach out to us via email directly, and we'll follow up. Thank you all, and I hope everybody has a beautiful day.